Let's focus on the biggest gainer today. That's Hindalco, because novelists, because of the comments that came in yesterday, the disclosure that came in, that they could be looking at an IPO of novelists. Ashish Kejriwal of Nuvama joins us on the show. Hi, Ashish. Good morning. The stock is up and about, but you see this as, not such a big case for a re-rating event. Tell us more about that.
Hi, good morning, Nigel. Thanks for having me in the show. Yes, our call is the same. Actually, see, one has to keep in mind that why we buy Hindalco, because more than 70% of our valuation or value of the company comes from Novelis. And if Novelis gets listed over there, definitely there is no point buying Hindalco as such, and that will lead to a high holding company discount. One has to keep in mind that around 26% of Hindalco shareholding is FIs, and definitely they will want to invest directly in Novelis rather than in Hindalco. So this, I don't think that it will lead to any re-rating. In fact, today it could be a pop-up because the stock has corrected by around 15% in last 15 days. But after that, I think it's a good opportunity to book profit only.
Oh, all right, Ashish. So a couple of points out there. You're saying that the FIs, they could rather go and list and invest in Novelis itself. And second of all, you don't see the big case of re-rating. If they're issuing fresh shares, then the money would directly go to Novelis, which would help them with their capex plans, right? I mean, are we getting that correct?
Yes. So in
Okay.
fact, in terms of valuation, also, if you look at, we already are valuing at 6.5 times EV/EBITDA at 526 basis, whereas
Yeah.
their closest competitor, Constellium, they are trading at around 5.3 times. Though
Right.
Constellium is 40% of their size, but still they already are commanding a premium. So I don't think that there will be any further re-rating on this stock account of this.
Okay, and also the holding company discount will come in, so that is another factor that's making you a little bit cautious. My colleague Nisha, she put out an exclusive story just a short while back, and she's saying they're looking at a valuation of around $15 billion. That would be close to around 7.5 times, and that would be in all probability enterprise value. So the equity component will be around $10.5 billion. What do you make of this
Yes.
valuation?
So I think first it's on a higher side because if I look at our valuation, we are factoring in market cap of something like $9.6 billion for Novelis, which is at 6.5 times. And having that 7.5 times, it seems on a higher side only according to me. Though Novelis is a good company, it's difficult to replace that company, but one has to look at the valuation of their peer groups also. So I seriously doubt they should command that kind of premium going forward, and we will
Okay.
stick to our 6.5 times EV/EBITDA multiple.
Ashish, final question then. The money is going to be raised at, it'll come back to Hindalco. So it'll also be, there will be some tax on it. What is the taxation that they will have to pay on this money?
So see, right now it's not clear, first of all, that how much money they are going to raise because how much dilution they want to take. Second thing is money will be at AV Minerals Netherlands, which is a 100% subsidiary of Hindalco. So whether they want to transfer that money to Hindalco, obviously if they transfer it through dividend or capital redemption, there could be some taxation on that. So these things are still not clear, but my sense is it's better for them to keep money over there and then they may look for some other acquisition or something else.
Got it.
But directing money to Hindalco will not make a valid case because Hindalco India itself is a net cash company now, and the cash flows which we are projecting that will be sufficient for their future
Indeed.
expansion also.
Got it, Ashish.
So,
We'll leave it there. A good conversation. Appreciate you joining in. Just running into market open. Apologies. But I think much needed perspective there.